Hello and welcome to another update video about the PYTH network. This is one of the charts that produced a nice 1-2 setup recently and from there rallied in another potential impulse. Peaked here locally at around $1.15, $1.16 and seems to be coming down in a corrective pattern now. Quite nice structure actually. I mean it's a short chart history, quite limited. So the predictive qualities of Elliott wave are sort of limited as well. However, we can use Elliott wave to track some structures and the relevant support levels, and it can act predominantly as a risk management method here, allow us to understand the trend and when the trend breaks and when the relevant support levels basically are breaking, and therefore also the wave count would have to be adjusted. But for now, we have an initial wave 1 to the upside and the wave 2 to the downside that bottomed here on the 5th of March. We can then use the Fibonacci extension tool to determine if this wave 1, circle wave 1, has the right length. It's a little long for a wave 1. Okay, it exceeded the 61.8 extension level. That is acceptable though. If it, had it gone much higher, it would rather look like an ABC structure. But because it only really barely moved above the 61.8 extension, which is here at $1.04, it is absolutely acceptable to call it another wave 1. So we have a 1-2-1-2 setup, and the wave 2 is currently unfolding right now, basically. If or as soon as the wave 2 finds a low, a third of a third wave rally could start. That's at least the main thesis here that I'm following right now. The third wave could be a substantial breakout and could send the price higher to at least $2.31. Better probably $2.78 plus. And we could get a wave 4 pullback and a wave 5, and that should even send us higher. So there is quite some strong upside potential there, but the condition is that the 56-cent level is holding. So pretty good reward to risk ratio there to look basically for long positions in this yellow zone. I would prefer if the price could get into the zone. I see the potential that a triangle of sorts is unfolding here, but I would prefer the price to come down and touch the yellow support zone first before continuing the rise. My interpretation is that this is a 5-wave move up, as I said, in circle 1. We are in a wave 2 pullback, and we have a 3-wave move in wave A. So the A wave was an ABC structure, corrective. The move up was a corrective move in what I would consider wave B. And ideally, this C wave to the downside is going to break below the low of the B wave, low of the A wave, so below 85 cents. And the ideal target zone for a C wave is between 80.5 cents and 66.8 cents. So we talk here about the area between the 100% extension level and the 161% extension. They are common levels for a C wave, yeah, and especially a C wave reaches very often the 100% extension level. As I said, it's 80.5 cents. There is Fibonacci confluence here with the 38.2 retracement. So the yellow box is support. The white box, well, is support as well. It's more like a target zone for wave C. So we have the general support levels, standard support levels for a wave 2, where we know that if the price breaks below 56 cents and on a sustained basis, this setup is likely going to be invalidated. Official or formal make or break point and invalidation point is actually down here around 46 cents. And as long as that level is holding though, and especially the 56 cent level is holding, the thesis, the bullish thesis is alive. And I would prefer now for the price to come down maybe a little bit lower in wave C and then rally in the third wave to the upside. Now, it might get quite protracted on the way down. Okay, so it would not be uncommon to produce a larger B wave. This is sort of stuff that you can't really predict. It's even possible that this B wave itself unfolds as a triangle. The wave 2 can't really be a triangle, okay? But yeah, watching basically here still for a potential triangle shape that could develop. So just watching, just noticing that obviously, it's not entirely sure if this is an internal triangle, for example, in wave B, or if something different is going on, or if it simply just has the triangle shape, but it's actually not an Elliott wave triangle. Either way, it's a bullish chart against 56 cents. The lower we go, as long as we're holding 56 cents, the better the reward to risk ratio. And the third wave to the upside, yeah, could send us to basically, yeah, $2 plus. that's my update about PYTH. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.